Hello everyone, long time no see. I hope you're all doing well, both in trading and outside of it, and thanks for clicking on this video. I know we have a lot to catch up trading wise, so this video will do just that. But first, in this video, I will start a mini series of backtesting made up or found online strategies. We are thrilled to see that you guys are up for the Saturday backtesting sessions, and we said to ourselves that we should spice things up a bit, meaning that we will show you guys some strategies during the week, and then you will choose which one you want to be backtested during the weekend backtesting session. This week will be dedicated to divergences. So in this video, I'll cover a more dynamic approach with countless entries, numerous entries, actually 66 entries only on one pair for one month. So that's quite a lot. Followed by another video with a more mellow approach with a higher risk to reward ratio. So enough with the rambling, let's go and see the strategy. So the strategy, the first one actually. This one will be using the 5-minute time frame, and we will have some indicators displayed. As you can see, I will go through each and every one of them. So we will have 3 EMAs, 13, 21 and 50. We will be using these EMAs as a reference level for the price, for the pullbacks in price. So we will be setting alerts on each of the EMAs so that we can check for hidden divergences when any of the EMAs is touched, and then we will look for confirmations, so that confirmations for the trend to go in the same direction, but I will go into further detail in the next minutes. Now let's just go through the indicators. The next indicator that we are going to use is the RSI, which is the default one for TradingView 14 period, and we will be using this to spot hidden divergences. And last but not least, we will be using the ADX indicator. So this one is default as well, a 14 period, and I also drew a line on the 21 level. So this is the key aspect of this strategy. We will only be looking for entries when the average directional index is above 21, so the market is trending. Okay, another thing, how do we spot the trend? Well, this is quite obvious. These EMAs serve as a trend indicator as well, because as you probably noticed, we only take buys when the EMAs are crossed to the upside, and we only take sells when the EMAs are crossed to the downside. As you can see, the ADX does a very good job in filtering these kind of market conditions so that we know not to enter in any trades right here. So now that we have the indicator set up, let's talk about the hidden divergences a bit. Actually, let's talk first about the rules of entry. So first of all, we will only be looking for buys when the price is in an uptrend. So basically, when the price is in an uptrend, when the ADX is above the 21, we will be looking for hidden divergences in the RSI after a pullback in the EMAs. I hope that's clear for you guys. So we're basically looking for divergences made in the lows of the price when we look to buy, and for divergences made in the top of the price when we look to sell. I will backtest this strategy using various risk to reward ratios. So I will backtest it using the 1:1 risk to reward, the 1 to 1.5, 1.2 and 1.3 for the month of February this year on US dollar, Canadian dollar, and then at the end of the video we will compare the results. Let's look for an instance first of all, because I would like to show you guys some examples of both buys and sells, and we have an instance right here. So basically what we are looking for is for price to, in case of a buy, as you can see here, the ADX agrees with us. So we are in an uptrend, we are looking for a retest in the EMAs, and we are hoping for that retest to make a bullish continuation divergence. This isn't the most clear one, but is the first one that I spotted. So as you can see, we have this low created right here, and we will compare it to this low, and we can see that we have a slight divergence here. This is just from the top of the, just scrolling through the charts. So as you can see, guys, we have this hidden bullish divergence here. We are in an uptrend and we pierced the EMAs. Again, we have to wait for a confirmation candle, so a confirmation bullish pattern, whichever is. In this case, I think the confirmation would be these three green candles, including this nice bullish candle. So this will be our entry right here. As you can see, all the conditions are met. So again, hidden bullish divergence, we are in an uptrend, and the ADX agrees with us being over 21. The stop loss will be placed just below the low that created the divergence, so a few points below it actually, so let's say 83. And now the take profit will vary. As I told you, I will be backtesting it using various risk to reward ratios, but as you can see, the 1-to-1 has been hit here. Now let's scroll and look for a bearish divergence so that I can show you guys a sell example as well. As you can see, this strategy works pretty well in trending markets. You can spot numerous divergences, and in this case, let's take a look at this one, which is quite nice actually. So as you can see, again, ADX agrees with us, so we can look for trends. We can look for trades, sorry. The trend is to the upside, so we are looking for divergences made at the bottom of the price, and we can spot one right here. As you can see, we have the pullbacks in the EMA, and we have this nice bullish continuation divergence. We have the pullback into the EMAs, and we have this nice bull engulfing candle, which will mark our entry. And again, the stop loss will be placed just below the bottom that created the divergence, targeting, as I said, I will backtest using various targets. Let's scroll back a bit. Maybe we will find a downtrend. Okay, so regarding sell trades, as you can see, we have all the conditions met in this price range. So we have the EMAs pointing down, so we are clearly looking for sells right here. The ADX agrees with us, it's over 21. And to streamline the process, and this is what I suggest you guys doing as well, is to identify the first start of the trend, so the first retest of the EMAs. And as you can see, this is an impulsive move right here. So just draw a line on top of it, because now we are looking for divergences in the highs of the price, and you can basically set alerts each time the candles cross into one of the EMAs, as well as each time the RSI crosses the level that you marked, our reference level right here, so that each time your alerts come up, you can just look for a trade. And as you can see, we have a trade right here. This would be the first entry after this nice red candle. So again, what do we have here? We have a hidden bearish divergence. We have this top around here, and we are looking at this top. So the price created lower highs, but on the RSI, the price created slightly higher highs, as you can see right here. So this, we have our confirmation candle. Stop loss will be just above the high of the candle, and then you will target various levels. As you can see, this one was a loss. But again, what do we have here? We have another high in price. So we have this instance right here. So again, another valid entry. As you can see, we wait for the confirmation. You either enter after this wick and this small red candle, or you enter after this nice bearish candle. So this will serve as your entry point. Stop loss again just above the top in this case, and targeting anywhere from 1-to-1 to 1.5, or this will have to be established. But I think from just from looking at the graphs, I think this strategy will have a higher enough win rate just with a 1-to-1 risk to reward ratio, so that it will make it a profitable strategy. Just a few side considerations about the strategy before showing you the backtesting results. So first of all, it's quite discretionary, mainly because it implies divergences. So as you probably know, there's a whole quagmire regarding divergences and how each and every one is judged upon. I mean, do you take the last high or do you take a previous high? This depends to you. You can do it in the backtesting as long as you stick to one method. It should work. Again, the ADX is quite a useful tool because it basically filters all this market noise. As you can see, even if the EMAs are crossed, nicely crossed, the ADX doesn't let us enter any buy area, any buy signals right here. And it does a perfect job of keeping us away of losing trades in this area. And yeah, I think this is a strategy worth backtesting. Again, it's dynamic. I will be coming soon with the results of the backtesting. I took 66 trades in 1 month on US dollar, Canadian dollar, so that's more than enough. And yeah, I hope you guys understood it. If you have any questions, post them in the comments. So I'll return soon with the backtesting results. Okay, so the results are in. As I said, I backtested US CAD on the month of February. We had a total of 66 trades, and I tested the 1-to-1, 1-to-1.5, 1-to-2, and 1-to-3 Rs. As you can see, as I stated in the beginning, the most profitable was the 1-to-1, which actually showed a nice gain on account of 11%. What's interesting is that all the other 3 options had the same average to mediocre gain on accounts. And if we add the commissions and spreads, you will roughly be break even. Again, as you can see, the max losses in a row increase, of course, as you extend your risk to reward, and as well as a decrease in the max 1 in a row, sorry. So yeah, this strategy has potential, even though it's only a 1-to-1 risk to reward. As you can see, the win rate is more than decent, and the gain on account is decent as well. So these are the results. Please let me know in the comments if you want this strategy to be backtested. We will be creating a poll on the community site as well, so that we will know what to backtest on Saturday. Again, as I said, this is the first of the 2 divergence strategies that I am proposing to you guys. This is a more dynamic approach. We have lots of entries. As you can see, the entries are not that reliable, given that only the 1-to-1 shows a decent profit. But again, let me know what you think about this strategy. And now let's go into some catching up, because it's been well overdue. Okay, so first and foremost, I saw lots of you just asking in the comments about the FTMO funded account and how the 10k to 3085k challenge is going. Well, it's not going that well. We actually lost the 50k FTMO funded account. It's been a mix again between bad market conditions, and that just fueled my lack of discipline. And again, I started trading random. As I told you in previous videos, that's one of my, I don't know, go-to coping mechanisms in case of the strategy not going my way. Again, still something I have to work on. Again, full transparency here, so at least we got one step further. So we had the funded account, and then we got to the first profit split. Unfortunately, the second one is still due. But Cris now has 2 running challenges, one on My Forex Funds and one on FinoTrader. I'm not sure why she opened that FinoTrader one, but anyway, that's her business. And as concerning myself, I think I will stick to FTMO, but again, I would like to play around with some strategies, play around maybe mixing some price action, because I feel actually losing the 50k account felt exhausting, both mentally and physically, because after I failed it, I just looked upwards and saw the huge climb that I have to make again. So again, 10% in profit, again 5% in profit without losing. So for the moment being, I find it daunting, given that, as you probably noticed, we didn't post videos for a while. There's been a mix between work and personal life that kept us from doing that, and we had some exhausting weeks. Thanks for sticking around. Thanks for not giving up on this channel. So from now on, I think we will be back to posting on a regular basis for you guys. Again, backtesting strategies, keeping you updated with our funded accounts, keeping you updated with our last funded accounts, with our profit splits, if any. So if you guys have any other questions, please feel free to post them in the comments. It feels nice making another video, to be honest, because I forgot this feeling, but from now on we will be posting on a more consistent basis. So again, challenge-wise, so far for the moment, I am not undergoing any challenges. Cris is undergoing 2, so my Forex funds and Pheno Trader both. Actually, my Forex funds is a 50k one, Pheno Trader is a 10k one, from what I recall. And yeah, I think that's pretty much it, because you guys wanted to know about the FTMO account, so you know now. Okay, so enough with the rambling. Please let me know what you think about this strategy. Again, tomorrow or the day after tomorrow, I will post the second strategy. That one will has a bit more filters, so it will have a smaller amount of entries. So I think higher risk to reward will be, will be profitable there. Sorry, stuttering a bit. Yeah, so thanks for watching again, guys. Thanks for being so awesome. Thanks for sticking around, and see you in our next videos. Bye-bye.